Hey guys, welcome back to my channel. My name is Davis, and if you're only here for the first 15 to 30 seconds of the video, then these are the stocks that I'm going to be talking about today, and they're stocks that I either own myself or I'm planning on buying for 2022 and holding throughout the year, hoping to see some solid returns. So for those of you who are sticking around for the whole video, thank you so much for checking in, and let's get into it. Now, these are in no particular ranking or order, but the first one is going to be Kinsale Capital Group, or KNSL ticker symbol. And this is an insurance company that provides, disaster relief and insurance services for small businesses, construction companies, real estate properties all throughout the US. And for those of you who have been following my other videos, you know that I really like stocks that have the high market cap and low PE ratio. So Kinsale Capital Group is looking at a $5.2 billion market cap with a PE ratio of 36.3. So I try to look for the PE ratios that are around 20 to 50 and a market cap in the billions, just so I know that the company is solid, has been around for 10 plus years, and will continue to do well for the next 5 to 10 years as well. So with this stock, I don't actually own it right now, but I plan on buying a couple shares within the near future here and holding throughout 2022 and maybe into the next year as well. Now, this stock might provide a decent swing trade as well. So if you buy within the next couple weeks and hold for however long you want to and make a 2 to 10% return, you can easily swing trade this stock and see results there. So that is Kinsale Capital Group, and that is a stock that I am probably going to buy here soon and hold throughout 2022 and into the next year as well. Or I might make a swing trade like I mentioned. It might be something that I might make 5 to 10% on and sell out and move my profits into another stock. So that's just completely up to me and completely up to you with whatever you want to do with a stock like that. The next one is going to be Costco. Now, I've talked about Costco before. They're known for their phenomenal hot dogs. If you ever go to the food court, I would recommend getting one of their hot dogs. They also own Kirkland brand, which is very similar to Walmart's Great Value. It's a brand that provides groceries and is only specific to Costco. So when you go out and buy, rolls or soda or anything like that, it might have the Kirkland brand on it, and that is only owned by Costco. And this provides customer loyalty, and it is a very reputable brand. And if you talk to the soccer moms, they really think Kirkland is a solid brand, as well as anyone who buys from Costco. So that is a reason why I think Costco is a solid company and a great stock to invest in. And if you notice right now, it is sitting at $565.34, which is pretty high. So if you're just starting out and you only have, $100, you can do fractional shares depending on the brokerage that you have, and you can start out that way, dollar cost average until you own one share or multiple shares. And the next one is going to be MedPace, or MEDP for the ticker symbol. And this is a biopharmaceutical company that has done exceptionally well for this year. And this is another one that I actually wish I would have bought 6 months ago. And that's just how it goes with some of these. They just don't stop, and they have that headwind and keep climbing up. Now, because it's so high, it's up about 62% this year. And like I mentioned with Costco, you might want to start out buying fractional shares and dollar cost averaging and getting a good price and seeing where it will go for the next year. But again, this is another one that I'm probably going to start small on this year and hold for the next year or so. Or again, like a stock like this, you might want to watch it and make a quick swing trade on it after a couple weeks of owning it, or plan on holding it for 2 to 5 years and then reevaluating after those 5 years and seeing what else you want to do, if you want to sell it or hold it for another 5 years and go from there. Just another solid company that has done well year over year, has seen high returns over the past 5 to 10 years, and will probably continue to grow throughout the next decade or so. I say probably because you can never be too sure with stocks, but it does have a market cap of $8.17 billion, a PE ratio of 46.2, and does not pay a dividend, which you might want to take into consideration as well. The last stock I'm going to mention today is Intuit, or INTU. Now, this is a financial services, tax services company, and it's actually up 68%. It's done very well this year, and it's actually off its all-time high as well. So it could easily go back up to its all-time high within the next couple months here, because we're actually going into tax season, and Intuit owns TurboTax. So with more people using TurboTax, we might see Intuit's stock price go up within the next few months and provide a great swing trade or buy and hold. Now, this market cap, or it's a little bit riskier is what I was going to say. The PE ratio is 83.9, almost 84, so a little bit riskier there. but pays a dividend of 0.39% per year, which is not that good at all, but still a solid company and a solid stock to at least look into buying. So if you made it this far into the video, I actually am going to mention one more fund to buy into. This is not a stock, it's actually an ETF. But before I get to that, guys, I just wanted to say thank you so much for the support. And I am the underdog still. Again, I'm still a smaller channel, so if you like supporting the underdog, then go ahead and subscribe to my channel. I will be very appreciative if you were to do that. And if you like content like this, then go ahead and like this video. If you like stocks, ETFs, and investing, then put a like on this video as well so other people can watch it. So this last one is going to be SPYG or SPYG. This is not the same thing as the SPY ETF, the S&P 500 ETF that everyone talks about. It's more growth oriented, so it actually sees a little bit higher returns than the SPY. So if the SPY returns, 25% in 1 year, the SPYG will get about 28%. So it's a little bit higher growth than just the SPY. But I do like this ETF a lot. I've been following it for about 2 or 3 months now. I only have one share, but that is one last one that I would recommend buying for 2022. And of course, guys, another reminder that I'm not a financial advisor. I'm not even a millionaire or anything like that. I just do this as a hobby, and I really like investing in the stock market and trading stocks. So thanks so much, guys. Again, I appreciate all the support, and I will catch you later.